Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. It is Thursday, June 4th, 2020, and a good day to all of you out there. It's kind of a hot day here in Dallas, but I think it's going to be a good week on Wall Street. Here's kind of just a recap for everybody out there. Just wanted to kind of go over kind of how the market direction is headed today. It seems to be holding, but there is a little bit of a downward motion on the stock. Basically, when this slide was taken, the market direction was up, but the Nasdaq was down a little bit. Both three of the major indexes are trending down a little bit today. The S&P 500, the Dow Jones, and also the Nasdaq. So those are that's kind of the market situation. I think we're in a bit of a consolidation period, and I hope we consolidate well here. But I do think that we have some good profit potential from here on out. The volatility in the market has been moving downward. Now, I am showing these slides on I'm not showing the slides on TikTok, but on Periscope and on YouTube, I'm showing my slides. So if you want to see the slides, you could probably pop on over to youtube.com/DallasTradingFloor or on Periscope, which I think actually is really great, pscp.tv/DallasTradingFloor. And as you can see on this chart, the market volatility has been headed down. So, there was obviously the spike in March. It's been coming down ever since, and it's amazing because we're in a situation where there's a lot of civil strife, but for some reason the market is staying somewhat somewhat calm, which is interesting. It's actually headed higher. So I'm having a little bit of trouble with my tripod. Just the sticky thing just came off. So here we go. Come on, break there. All right. Okay. There. Oops. Wow. I lost the feed. So let me get back on there. Huh. Okay. There we go. Okay. So now I'm back on TikTok, and I've been live on YouTube and on Periscope since then. Okay. So volatility is going down, basically, and I just want to show you these other important market indicators. One of the first ones, of course, is the spider. Now, the interesting thing about the spider is that is the world's largest ETF. It's approximately $220 billion in market capitalization, and it's been going up. Now, it's off a little bit today, down about 1.56 in terms of dollars, about a little bit less than about 0.5% down. This is a very key level for the S&P 500. If it breaks through this 310, I believe it's going to continue higher, and as you can see, it's above the 40-day moving average. So that's a good sign. I do believe that, I was very skeptical initially about this V-shaped recovery, but it appears that is the case. We're almost back to the levels that we had in February on the Nasdaq. So this is a very interesting development. I mean, the Nasdaq is above 9,500, so it's a very interesting time. There is money that's on the sidelines that's getting ready to come into the market, and we could have an extremely powerful uptrend here with all of this capital that is sitting on the sidelines. So basically, I want to kind of go over with you the stocks that that they're buying out there. The funds are, and this is important because one of the best ways to make money in the market is to look at what the funds are buying, and it's kind of a mixed bag in terms of what they're buying. But I just wanted to kind of go through that with you. There's nothing really here that I am really particularly interested in, but I'm putting it up here for the basically for everyone so they can definitely see it. The I will show you the continuation of this as well. Okay, so here we go. There's really nothing on there with the exception of Capgemini that I really like, and basically I just show that up for the for demonstration purposes only. Now, the list of stocks that I'm very interested in is the big cap 20. These are the largest, typically tech stocks in terms of their capitalization. And first on the list is Nvidia. It's been down a little bit, but I still think it's holding in there at about 350, and I think it's still very, very strong stock. We don't have an entry point on it yet, but I have traded it just for full disclosure. I have been in the stock as well. So let's see what's on that might be of interest on the big cap 20. One of them is Fortinet, which is a internet security stock, which I think is an excellent play. I had a play on that, I think, on Monday. BioMarin, this is one of my all-time favorites. This is the company that does orphan drug treatments, and I think it's very worthwhile taking a look at BioMarin. But nothing else really is of tremendous interest to me, with the exception of this one, Franklin, Nevada. And I'm going to go through a play on Franklin, Nevada. Now, I do think we're coming into a period here very quickly where where we're going to have some inflation, and there's going to be some demand for the gold stocks. There are really two gold stocks that I'm interested in trading. One of them being Franklin, Nevada, and then the other one being KL, which is Kirkland Lakes Gold. So I will have something here for Franklin, Nevada. Now, here's what I want to show you. And again, this is being simulcast on YouTube as well as a Periscope, pscp.tv/Dallas Trading Floor, and also on YouTube at youtube.com/Dallas Trading Floor. Now, Franklin, Nevada is in a little bit of a pullback. It's pulled back about 20% in a profit taking, but it's still above the entry point, which is 122.75. So this is possibly a one that you might want to get into. I don't know if it's going to make headway in the early part of the summer, but I do think by the late part of the summer, I think we're going to see this one move very strongly. It's the best of the gold stocks, and it is moving sharply higher. It got a 99 composite rating, making it basically in the very best of the very best. So it's 1% stock. Those are the ones I like to trade, the ones that are there. Now, here is a way to enter that stock safely, so that if it does readjust it down a little bit more, you're still in it, and you're not in a loss position. And that's basically to do this trade: buy 100 shares at 134, which is the market price, and then sell a 135 call for June 19th. That's the next call expiration date. This is a monthly call as opposed to a weekly call. That will, if you end up getting exercise on that, you will still make a pretty good 77.9% annualized interest. And if you're not exercised, you'll keep the premium, which in this case is about $350. But you'll also be in position, if Franklin, Nevada moves higher, to benefit from there as well. So this is a stock that I think if we see any inflation, I think this is one that is going to be very significantly affected by that, and it potentially can go much higher than it is currently, just because it's it is a gold stock, but it's not actually the physical gold. I like to hold stocks that don't have physical gold, only because I just think that isn't really, can be difficult. I think that when inflation comes, it's good to be in gold, but not in the physical gold, in the gold mining stocks, because that's where the real demand is. So let's see. I have some tech talk, people. My buddy did a Tesla call, 880. Yeah, awesome. You know what? I have a Tesla 880 call as well. I have it expiring on Friday. So hopefully I'm not going to be called out of this one. I'm hoping, because it was a very sweet. It was a nice sale. I sold it for about. I sold the call for about 20. So I think that I should do very well in that. Hopefully it doesn't. It closes below 880. If it does, no problem. If it closes above that, I'll be exercised, which is okay because I keep the call premium, but I also get a little bit of a bump on the stock because I bought it after I sold it last week. I've basically been rinse and repeating on Tesla. It's been a very good stock for me this year, and I think that's excellent. The fact that your buddy did great on that. All right. Do you trade futures? I don't really trade futures because there's enough action in in calls and puts. I'm really an options trader more than I am a futures trader. And that's really that's where I find my sweet spot. Let's see. Hey Jim, I noticed today that a post saying that our market is stretched extremely thin and leveraged. Finds like TQQQ are completely screwing up the markets. Thoughts on this? That's a great question. Thank you very much, Noah. I so appreciate you you putting that in there. Yeah, I do think we're a little bit stretched, but here's the thing: we're at some key levels, and one of the things I look at very closely is the price of the spider, which is the S&P 500. It is currently trading at about 310, which is a very important number for it. If it moves beyond that, which it may, it's showing a lot of strength. Then I do believe that we're going to see a whole lot more money come into the market that's been sitting on the sidelines. So I'm not sure that I'm not sure that this is right. I do think that this market is this is a market not to fight against. Now, for everybody out there that doesn't know what the TQQQ is, there are two funds. There are two funds that basically play on the Nasdaq 100, which is the QQQ. That's the stock. There's the SQQQ, which shorts it, and then there's the TQQQ, which goes long. Now, this gives a 3 times leverage on the index, the QQQ index, which is the Nasdaq 100. So when the market is moving higher, and especially the Nasdaq is moving higher, the TQQQ can be a very good short-term play for profit there. So it may be screwing up the markets because so many people, instead of buying the Qs, they'll just, whenever they see the market moving, they'll just move into the TQQQ for a day or two. And you're right, it does create some difficulty sometimes in the market. So those are basically really those two funds. Now, an interesting kind of development in the last 10 years in the stock market is that I think now there are actually more ETFs than there are actual stocks on the New York Stock Exchange. The ETF investing has gained so much popularity because, frankly, it's a great way to go. I mean, if you want to be invested in the market, but you don't want to necessarily trade it, buying a fund like the Spider or the QQQ can be a very, very good way to go. Just kind of a set and forget. As long as the market is in an uptrend, you want to be long, and so that can be very good. So. That's the reason that they have all these specialty funds. So if, for instance, you want to invest in any particular sector that's kind of difficult, like biotech, there are funds for that. And there's even funds for Bitcoin. So it's kind of interesting. So let's see. Thanks for you doing Periscope. Yeah, absolutely. This is one thing I really like about Periscope. It's just so much easier to use than YouTube. I don't know why it hasn't gotten as good traction, but I really like their interface, and I think it's a really good, it's just a really good platform. I've had really, really good luck with it, and so it's the kind of the kind of thing that, I really like. I really like the fact that I can stream to it, because I do really enjoy it as more than YouTube or some of the other ones. So let's see. Question from my buddy did. Okay, that's a Tesla call. Yeah, that was excellent, by the way. What's your thoughts on Thinkorswim platform? That's the one I use. I use Thinkorswim, and I really believe that it is a tremendous platform. I've been very successful trading options using Thinkorswim. I mean, I know that sounds, here I'm not even a paid I'm not even paid by TD Ameritrade. It should be, but I do think it's an excellent platform. And then here's the thing: you don't have to pay for it. You just basically sign up for it, by getting a TD Ameritrade account. So it's really it really works out well. I really think that it's definitely the way to go. So I highly recommend it. What do you think about Black Spider? You know what? I really don't think a whole lot. I think that there's a lot of people in the country that are very frustrated about a lot of things, and they're taking it out on the system, and that's kind of sad because I'm old enough to remember when there were riots in Washington D.C. I lived there at the time in 1968, and the city was not rebuilt for almost 15 years. So it's really quite sad. It's just gonna further exacerbate the problem. People are going to move to the suburbs, or they're going to move to cities that are suburban in nature, like Dallas. So it's kind of sad. Um, any thoughts about Nikola Motors? Not really. Here's the thing about Nikola. I like the space that they're in because I do like the electric truck business. I think it's going to be absolutely huge. Part of the reason I think trucking is going to be so huge is because I don't know if you've ever been involved in trucking or not, but the breakdowns on the diesel powered trucks, believe me, are tremendous. Even with the latest technology, trucks just don't last more than about 3 years. Electric trucks should be able to be on the road for 10, 15 years easily. So I think it's going to be a game changer in terms of the cost, and Nikola is definitely there. But the problem with that is, I see it as the biggest problem is with Tesla. I think Tesla is just going to be the superior truck because they have the mind share right now, and I think you're going to see a lot of companies invest in the Tesla trucks. UPS has made a major order, as well as Amazon and several of the other delivery companies. I think for delivery companies, the Tesla truck is going to be just a tremendous boon, and it's going to be a very big deal. Let me see. Okay, so until July ends, it looks like people will be happy to stay home and collect unemployment. Absolutely, I agree with that. Here's the problem. Eventually this is going to end, and people are going to have to, they're going to have to get a job, and it's not going to be pretty. But at least for right now, there's a lot of liquidity in the market. The Fed has pumped a lot of money into the stock market. That's the reason I believe it's going higher. It's just there's nowhere for this money to go, so it's going to go first into the most liquid of all assets, and of course that's the equity market. That's of course why I'm trading it. Let's see. Do you think I think we are headed towards inflation, but right now we're not. We're in a deflationary period. So I think that it's very, don't fight the tape. This is a very, very important lesson. Even though you think it may be coming, even though you think that something may be happening, don't do a trade based on that until the market tells you that that's the direction it's going. Right now, the direction is up in the market. The market is saying that people are going to be putting money into the market. So don't fight the tape. Don't short the market. And I don't think the inflation trades are ready to go yet, but they will be. I'm pretty positive that we're going to have some inflation by the end of the year. And of course, the hedge, the traditional hedge for inflation, of course, is gold. But the problem with that is that gold is very, it has many other things that go into the market. Everyone will say always that, hey, you shouldn't buy gold. You should buy silver instead. This is a bad trade because here's the problem with silver. Silver, the silver market is heavily dominated. The silver market is much larger than the gold market, and with the silver market, you have a situation where, with the silver market, you have a situation where you just don't know how much silver is out there. When silver prices go up to like $50, you see it come out of the woodworks. I mean, people will melt down their silverware, they'll do anything, and silver will come out of the market. So if you're going to look for a metals trade, be very careful dealing with silver. Many years ago, there was a gentleman here actually in Dallas named Bunker Hunt that basically broke. He was one of the richest men in the country, and he became bankrupt by betting on silver. So be very careful when the inflation begins at the end of the year, which I think it will. I think the way to play this is to play it with the gold companies. Now, that's the reason why I put up a trade on Franklin, Nevada. I think Franklin, Nevada right now is the best of the best when it comes to the gold stocks. And I want to put that chart back up here. I have it up on Periscope and on YouTube. So let me just increase the size of that so I can show you kind of that chart. This is one that I definitely think it's time to start looking to get into it. You're not going to make a lot of money initially on this, but I think that it's going to move higher. And this is FNV, Franklin, Nevada. It's currently selling, when the slide was taken, at 133.75. So definitely something to look at there in terms of that. Let's see. Okay. Yeah. Another question. At least for people with unemployment benefits. Yeah, it's true. This is a really good question. By the way, Market Trader, and this is for people on TikTok. Market Trader has put up the thing. Well, people want to be on unemployment because it's better than the salary. And yes, and that is the problem in this country. Wages for the normal people in this country have not kept up with the cost of living, and that's why unemployment benefits are higher than what they can make as wages. That has to be equalized, and that the only way to equalize that is going to be through a little bit of more of a protectionist stand by the U.S. In the U.S. with more tariffs and more manufacturing coming back to the U.S. Okay, why why Franklin over Barrick? Because Barrick is only one. Barrick, by the way, everyone should know this. Its symbol is GOLD. It's the biggest of the gold miners. It's a U.S.-based company. It's a good company. Franklin, Nevada is a major investor in Barrick. The advantage of Franklin is that Franklin does not mine gold. It invests in other gold companies, and that's why I think it's a much better, safer bet than Barrick. I think it's going to do better than Barrick is, and that's not my own. I'm not the only one with that opinion. There's a lot of people at Investor Business Daily that also believe that. So I think that's where you want to be now. In terms of a pure play in the gold stocks, I think the one to be in, it's a little less expensive, is KL. It's Kirkland Lakes Gold. It's a Canadian company, but they are heavily they do exploration in Canada, but they also are very big in Australia. Australia is becoming the major gold the major gold producing region in the world. That used to be South Africa, but because of the deterioration of the government and the economy in South Africa, that's no longer the case. Rhodesia, well, I'm sorry, that I shouldn't say that. Zimbabwe and South Africa used to be the world's leader in terms of gold production, but that's no longer, that's becoming less and less the case because the government has exacerbated investment there. So they're living off their past. They're basically eating their seed corn. The places that are going to produce most of the gold in the future are probably going to be Australia and Canada. So that's why KL might be the way to go. What do you think of a cruise stock like, Caribbean Cruise Lines? I do not like the cruise stocks. I just don't, because they're sitting on a huge amount of debt, and I don't know if the levels are going to come back with the cruising. I don't know if cruising is going to come back as quick as people think it is. I don't, it's not a place I want to be. I don't want to really be in the airlines, and I don't want to be in the hotels, and I don't want to be in the cruise lines. And not because I don't like the business, I just don't like their business model. I don't think they're going to be very successful, because they're going to have to get, there's an overcapacity in the industry, and as we all know, when there's an overcapacity in any industry, that's when you have deflation. That's when you have less, there's not enough demand, and there's a lot of ships out there. So it's not a place I would personally want to be. I don't really like the cruise lines. Next report says that Trump expects the next stimulus to be around $1 trillion. Well, that's probably true. I think here's the thing. Never, and this is just I've been through a lot of these. Anytime you're in a presidential election year, it's not a good time to bet against the markets, because, and this may sound a little cynical, they do stimulate the markets so that the incumbents will retain power. This has happened, really since the 1960s. So I think we're going to see more stimulus, and I think, $1 trillion is definitely, is definitely in the cards. I really believe that. Let's see. What do you think of lithium? Lithium. Well, it depends. I mean, how much lithium am I taking? No, I'm just kidding. Lithium, as you know, is a metal. It's the lightest of all the metals. If you remember back in chemistry class when you were when you were sleeping, lithium is the lightest of all the metals, and it's an important metal these days because it is the primary ingredient in lithium-ion batteries, which basically power Tesla and all the other electric motors, and of course the laptops and cell phones all use lithium. So I'm sorry to be Captain Obvious here, but this is the reason that it's so important. Now, here's the issue with that. A lot of the lithium mines are in there are some in China. Australia is going to be a major force in mining. The mining industry. Australia is one of the few places in the world these days that has a stable government that allows for large scale mining. So this is why I'm always very interested in companies that are mining in Australia, because I do think they have very, very good potential. So that's one thing I look for when I'm looking at mining companies, is I look for companies that are primarily in Canada, primarily in Australia, and U.S. to some extent, though the EPA has made it difficult to mine in the United States. So U.S. is not as good as it used to be in terms of mining. Hey Jim, just joined. Why did the market today? What did the market today? Well, it kind of went down. It went down a little bit today. The market is sort of digesting this tremendous upward movement that it had. I mean, the last few days have just been stellar for the market. Now, let me see if I can show you the first slide here. And by the way, these slides are available on not on TikTok, unfortunately. I wish I could project these on TikTok, but these are basically on YouTube and on Periscope. Again, I'm simulcasting on Periscope at pscp.tv/Dallas Trading Floor. Now, if you'll notice, the market is a bit down, but the Nasdaq is above, very important, the 9,500 mark. So yes, it's a little bit of a down day, but we've had 3 solid up days, and it's been a very good week. Not so much today, but it's been a very good week. So I do believe that we're going to finish out the week very, very well. So, but the market is the confirmed market direction right now is up. So this is why you do not want to be short. You don't want to be in any of the shorting ETFs like the SQQQ. Please stay away from that right now, as the market direction is going up. Now, if it changes, the market direction changes to a downward arrow, which I don't expect actually, then you might want to be short. But right now, it's too dangerous to be short. You want to be long the market, as I am. Let's see. Okay, so let's see if I've got another question here. What do you think of lithium? Okay, I think long term it's got a tremendous future. What do you think of the cruising stocks like Royal Caribbean? I'm not a fan. Market in August. Your thoughts? Okay, I think we're headed towards a more inflationary market as the economy starts to move up. I don't think that it's going to be. I think it's going to be inflation in things that are. I think there's going to be inflation in certain items. I think there's going to be a lot of food inflation. I don't think there's going to be very much gasoline or oil inflation, but I do think food is going to move higher. So therefore, why would that be important? Well, some of the food stocks may be hurt, but the consumer staples is not really a very exciting area. It's not an area that I really trade that much. There are some good stocks in there, like Hormel, which is always a good stock, but it's just not an area that I'm particularly interested in. What I'm really concerned about, the thing I'm most concerned about coming up is the potential defaults in the auto credit business. I know a little bit about this business because it's a very big here in the Dallas area. A lot of the automobile finance companies have their operations here, and there's just a lot of bad paper out there. I think it's going to get worse. And so if you're looking to buy a car and you have cash, it's going to be a really good time. There's going to be some very cheap cars out there. By the way, Hertz, it's been in business for and I loved Hertz. I used them all the time. Been in business for, God, almost over 100 years. They went bankrupt. Now, I think they're still operating, but they're in bankruptcy. So it's just not a good time for a lot of the companies that are in finance. So steer clear of companies like Capital One that have a tremendous portfolio of automobile loans. Also, a lot of the credit unions, be careful if you have money in a credit union, as they tend to lend a lot of money into the auto finance market. I don't think it's a good market. I think it's going to see a lot of stress. As a matter of fact, I don't like hardly any of the financials at all. Even the big banks, even the best of the banks like J.P. Morgan Chase and Wells Fargo, I just don't think you want to be in them. Be careful. The only financials I like are what I consider the new tech financials. The financials like PayPal. PayPal I like because I do think that they are, they're fundamentally different than just a regular bank in that they, anybody practically can have an account there. I know I've had a PayPal account for going on almost 20 years. Almost 20 years, and it's so I do think that those kind of stocks are definitely you want in the finance, you want to steer clear of the banks. You really just do. Okay, so let's see if I can. All right. Do you think Ford is worth doubling down? No, I don't think so. I would sell Ford. Just been waiting to see. Now, you might be able to make some money when Ford. I don't think Ford's going to go out of business. Part of the reason is because the Ford family has the B shares. Now, Ford is Ford has different. Ford has different shares of stock. The voting shares, the common shares, are I think the A shares. I'm not exactly sure about this. The B shares are the ones that are held by the Ford family, and they're the ones that really control the company. So I don't think Ford is going to go out of business, but the stock is just horrible. I wouldn't be in it. I think you've really, if you're going to be in the automotive, you really got to have exposure to Tesla. I think that's the only way to go. And I know there's not much choice, because on the one hand you have a stock that's below $10, and you have another hand that the stock that's like trading in the 800s. So it's kind of weird. What are your thoughts on Luckin? Luckin is an interesting story, and I think that it's a very cautionary tale. This is one of the reasons why the other day I was looking and I was going to recommend Baba because the stock looked really good. That's Alibaba. That's one of the biggest stocks in China. I don't, because I don't trust the Chinese accounting. That Luckin Coffee is basically a problem because, like most of the Chinese companies that are heavily owned by the Chinese Communist Party that have control of them, their accounting is fraudulent for the most part. So you just cannot. I mean, they were saying that they were opening stores that they weren't. There's nobody counting. So a lot of people lost a lot of money in Luckin Coffee. Be very careful about stocks that are Chinese, because typically they do not adhere to the same accounting standards as American companies do. So whereas Starbucks is is a great company, Luckin Coffee not so much, because they basically were lying when it came to their number of stores. So that's something you got to be really careful on. I mean, I know it kind of sucks, because here I am broadcasting on TikTok, which is basically a Chinese company, though they are trying to move a lot of their operations to Los Angeles. I understand why. The Chinese situation is a difficult one. I think that we're going to continue to have some strife between the U.S. and China. So it's just going to be it's going to manifest itself in in unfortunate ways, I think, sometimes. So be very, very careful when trading Chinese companies. Luckin Coffee is obviously a cautionary tale for people. Okay, let's see. Da-da-da. Okay, on Ford, I would be really careful about doubling down. Thoughts on Bud? It's jumping. I like their beer. By the way, everyone, Bud is the biggest, now is the biggest South African company probably listed on the New York Stock Exchange. It is called Ambev, South African Brewing, SAB Ambev. It's basically a South African company, but they bought Anheuser-Busch, so that makes them the largest beer company in the world. I do not like this space. There's too much competition. They're not strong in the craft brews, which I think is the future. People want craft brewed beers. Just here in Dallas, which is an average town in terms of beer consumption, in terms of beer places. I don't know how many. I think there's like 300 breweries or something. I don't know what it is. Um, I think we're going back to the future where there's going to be a lot of small craft breweries, and at least if I'm going to be consuming beer, I want to be consuming the very best, and I typically like the small breweries. And the only real play in that would be Samuel Adams. Boston Brewing Company. Again, I don't know. I'm not a fan of Bud. I mean, I like Bud, the beer, not so much the stock. So that's just my opinion. But I know you're long on beer, and that's always a good thing. Beer does make everything. Everything tastes better with beer. That's for sure. Um, I have luck with oil stocks. Well, hey, man. Actually, the oil stocks are a little bit different than the oil stocks are basically a different situation than with the beer stocks. um, but it's still difficult. If you want to play the oils, I think the safest way to play it, just because there's so much turmoil and so difficult to tell what's happening in the market, is the XOP. That's been moving strongly. The XOP is probably the preeminent ETF that covers the oil sector. I think that's probably where you want to play the oils right now. I do think we're going to have a rebound. Obviously, the prices have moved up significantly, which is great because we've got to get the Permian Basin back online. And once I think it does, I think that the economy will once again kick into high gear. There's a lot of forces at work here internationally that want to hold back the United States and the United States economy for a lot of reasons. And one of them is the oil business. So, we have our quote-unquote friends in the Middle East that basically tried to put the kibosh on our domestic production. But that's going to come back. And so I think the XRP might be a great place to play that. That. What about, yes, XOP was a good, yeah, I made 1,000. Okay, great. I think the XOP, even from here on out is possibly good. Let me see if I can bring up let me see if I can bring up the XOP here real quick. Okay, there we go. Move back to Chrome. All right, so no, I'm trying to. There we go. Well, I'm not going back to. Let's see if I can do that here. Try to get that to. There we go. Okay, I just want to pull up. I want to pull up a chart of the XOP here, real quick. Let's see. XOP. Gas spider. Let's see if I give you a good chart on it. Yeah, it's just extreme. Look at that. On that, you can see this, by the way, on. I'm simulcasting this on. You can't see it on TikTok, but you can see it YouTube and Periscope. And this shows, I'm just look at the 6-month chart here. It's just very interesting how this has moved. Yeah, here we go, the 6-month chart. If you look at the 6-month chart, we're almost back to where this problem started, and that's the $60 level. I think if I were looking to be in the XOP, I'm not currently in the XOP. I'm thinking about getting back in. I would get in now. I think it's going to be good up to about 75. So, I do think that the oil market is going to recover, and I think you could make some very good money on the XOP. The XOP covers. The reason I like the XOP is because it limits your risk. There's some real problems with the oil companies. Some of the companies like Occidental are in trouble, but there's other companies that have a lot of cash, like Chevron and ExxonMobil, that are going to be buying some of these smaller companies. So there's a lot of different ways to go on this, and I do kind of recommend that if we do have an inflation trade. Again, that's one of the reasons I was showing Franklin, Nevada. One of the reasons I was showing Franklin, Nevada, is because I do think we're going to have an inflation trade. Now, if we do have that, there's going to probably be a little bit of inflation, hopefully, in the oil market. So I'm hoping that's going to be the case. Why? Because I happen to have an oil lease in West Texas, so I'm hoping that I can release that. Sounds very exciting, but really it isn't. Okay, let's see. What about NAT? Let me just look at NAT real quick. See if I can give you a number on that. See if I can give you something on that. And I don't know if that's the NAT. Is that right? Okay, let's see. North American tankers. Oh, okay. I think I've had a question on this one before. Let me see. Yeah, I don't like this chart at all, but sorry to be such a negative Nelly, but no. Okay, here's why I'm not a fan of NAT, and I know you may be in it, and I hope you're not in it for a lot, because I don't know. I don't know if it's going to be what you like. But see, look at this chart. This is not the kind of chart you want to see. It's moving in a downward fashion. By the way, this chart is available on YouTube and on Periscope. Basically, NAT is selling for $4.38. It just is not the kind of chart I like to see. I don't like to see them when they're going this direction. I want to buy them if I'm buying low, which I don't typically like to do. I like to see them coming up. This is still a downward trending chart. I just think you're going to be disappointed with this overall. So not at least for me, why is NAT so low? Well, I don't know, but there's just no demand. See, this is the problem with the shipping industry. The shipping industry is overbuilt. That's why I am not. That's why I like Royal Caribbean, Carnival Cruises Lines, all those things. I'm not for them. Not because I don't think they're great companies. They're very well run, but the problem is there's just oversupply in the transportation sector, and that goes true with the bulk transports too. Those are the oil tankers. It's just not a good business right at this time. There's far too many tankers chasing far too few loads. And the demand for if the demand for oil was going through the roof, which it is not, because of the slowdown with this coronavirus in China, I just don't think it's the place to be. And I think that if I had invested in, I would probably be. Here's the thing: I typically don't like to see a stock decline that I'm in more than 7%. If it does, I'm just out. And the reason I am is because usually I can find something that is going up, almost always. Thoughts on cruise and airline stocks? I'm up for. Well, that's awesome. I mean, no. I mean, I definitely think the stocks have been beaten down. Here's the thing about airline stocks. I think once this reopens, I think you're going to find that, now if you're trading them, it's different. If you're trading them, if you're, I mean, there are dead cat bounces, and I think you can do very well on dead cat bounces, like, people that are buying the airlines. I mean, if I were buying the airlines, I'd only buy one, and that's Southwest. That's it. I mean, I wouldn't buy any other ones. But you can make money. They have been beaten down, and airline traffic will come back. But I think you have to be very careful, because once we reopen, you're going to see a lot of bankruptcies in the sector. So, I don't know. The individual stocks, you can probably make money trading, and if you are, I think that's awesome. I mean, you're up 40%. I mean, numbers don't lie. I mean, if you're up 40%, that is killer. So, you definitely can always make money with disfavored, dead cat bounces. But I've had in my career, I've had a lot of dead cat bounces just get dead. So that's kind of where I'm at. All right, let's see. All right, let's see. Okay, thoughts on airlines and BA. Boeing. Boeing, I don't think, boy, it's a really hard call with Boeing. BA, I was in BA. I was in BA up to 140. I sold. Boeing is still the largest exporter, but they just laid off 15,000 people. So I don't know if I don't know if I'd want to be in it at the levels that it's at. I want to just for fun. I want to see I want to look at the chart of BA, just because it's always good to get an idea of kind of where of what we're talking about here. So let me see if I can switch to the chart here of BA. Yeah, it's up definitely 183.50. And let's see if I can, I can. There we go. Okay, if I can kind of put that up there. So let me push it up there a little bit. Yeah. And let's see if I can give a. Yeah, it's definitely, that's the kind of chart I like to see. Definitely, and this is the lows right here in May. So you can't argue with that chart. I don't know. Let's see. I want to see if it's going to retake. Yeah, it looks like it's going to get some resistance right here at about 180. So it looks like it's right up against resistance. I'm trying to see. But yeah, I mean, this really isn't. It really isn't viable until you get to. It's not really viable until you get to 2. So you could probably make some money. I don't think Boeing is ever going to go out of business. It's just too important a company when it comes to national security. So I don't think Boeing is going out of business anytime soon. I don't think Boeing's going out of business anytime soon. It's just this. Okay. Jim, I see gold is looking bad. Well, yeah, it is, because, here's the thing about gold. I do think gold, we haven't seen the inflation kick in, and whether or not it'll kick in, I don't know. There's been an awful lot of stimulus. I mean, gold isn't a buy right now because we're in a deflationary period, but I think towards the end of the summer it possibly will go up. I don't think it's going to go up to like 5,000 like everyone's saying, but I do think it's going to go up. So gold's tough. I mean, it is, and I put out the trade on FNV today because this is why I don't like to be in the physical gold. It's precisely because of this. I like the gold miners because it's just more profitable to sell shovels to people than it is to actually own the stuff. What about Air Canada? Okay, Jim, I'm from South Africa. Okay, you're from South Africa. That's awesome. I'm from South Africa. Even gold prices. Let's see. I'm sorry. Jim, what about Air Canada? And Jim, I am from South Africa. Even gold prices or BA. Wow. Here's the thing about gold in South Africa. It 30 years ago, South Africa was absolutely the undisputed king of mining gold. They mine more gold than anywhere else in the world. That is unfortunately not the case anymore. So um, I'd be careful. I do like the gold sector, but I don't want only certain ones. The one I like the most is KL, Kirkland Lakes Gold. That's a Canadian company, and they primarily mine in Australia. And I think they're the best of the best in terms of that. So let's see. Thoughts on Tesla? Well, I own Tesla, so I've been trading Tesla really since about December of last year, and I've done very well with Tesla. I do think it is the future. Um, I think I think it's going to be hard to beat. I do think that the stock is probably going to go over 1,000. Now they may, I'd like to see them split the stock, to be honest. But right now, at the last meeting they're talking about possibly advertising. I think once they start advertising, I think a lot of people are going to switch out of high-end cars like Mercedes and BMW, and I think they're going to buy Tesla. And I do think I do think they have an excellent future. I'm currently in the stock. I have a 880 call that I sold. It expires tomorrow on Friday. Um, I'm hoping that I don't get called out this time because I do own the stock as well. But if I do, it's fine because I still make money anyways. But I could probably make some more if it doesn't. So I'm hoping it's going to trade below 880. But if it doesn't, that's okay. I've already made the premium. So. I just really like Tesla right now. Um, what about American Airlines? Are they gonna make a profit? Are they really gonna make a profit? I don't know about American Airlines. American Airlines you're talking about AA? Okay, Jim. I'm from South Africa. Uh, even gold price. Even gold prices or BA. I don't know what that means. Okay. Um, I do think gold prices are going to move higher. I don't think they're going to move. Here's the thing. The dollar is weakening somewhat because of all of this liquidity that's been put into the system. The dollar is weakening a little bit, but it's still, it's still going to be a while before before gold goes. I do believe at the end of the summer though we're going to see some increases in gold. Your thoughts on VGT, long-term capital gains, ETF fees, and inflation? Well, hey, thanks, Rama. Appreciate you dialing in here. Um, I do think we're going to see some inflation towards the end of the year. This is one of the reasons why I'm kind of, currently I am not in gold, but I am looking very strongly at two stocks, KL and FNV, because I do think we're going to see some inflation. The dollar is weakening a bit. Um, in terms of long-term capital gain, now VGT. Let me see if I can get you some information on VGT and the options on that. So let me see what that is going to yield for me. VGT. Yeah, Vanguard Information Tech ETF. Okay. Stellar. This is a good call, by the way. Uh, um, Rama, I think you made a really good call on this one. This is definitely um, yeah, this is definitely something, and I want to show you the chart on the VGT. It's just been, like the fangs, like everything else, the tech, it's just done very, very well. Um, I'm sure that there are going to be um, some capital gains on the ETF, but you don't have to worry about that because the buying and selling that's rolled into the share price on the ETF. And one of the things about Vanguard is Vanguard tends to be very efficient when it comes to tax. I've had Vanguard funds for years. Actually, I've had Vanguard funds for other things that I manage, and I've had very good results. So, but I do think we're going to see some inflation. Now, here's the reason inflation, I believe, has been held in check so well in this economy because of the explosion of tech. Tech is fundamentally deflationary. It tends to it tends to get rid of the labor component of a lot of industries, so it's deflationary. So that's the part of the reason, one of the major reasons I think we've had this long period of very little inflation. Now, that really changed when the Fed started pumping money into the economy. They've just put trillions of dollars in the economy. That's got to go somewhere. That is inflationary. It hasn't really hit yet, but I do think it's coming, and I do think it's coming. But you see, we're in a very different time than we were even in the 60s or 70s when you got inflation. Anytime practically. You got inflation all the time. Well, with information technology in particular, that has been so deflationary in terms of, I mean, you're able to do so much with so little. I mean, I'm able to basically have a broadcast studio in a browser, and the company is run by, maybe 20 people or less. And so, that's just deflationary, totally. Okay, so let's see. Thoughts on VTIQ or versus Nikola? Let me take long-term take profit. Okay, got in a VTIQ at 875. That's pretty awesome. Are you up? Let's see if you're up 20%. Let me just kind of switch back here to see if I can give you a read on that. And again, I'm on so you can see the chart. VTIQ. I'm on Periscope and on YouTube. So let me look at the chart on this on the month. Let me look at the month chart on VTIQ. Oh, Nikola. Okay, Nikola. Currently not available. Huh. That's interesting. Okay. Wow. I wonder what's happening there with Nikola. Huh. Yeah, it's giving me a. All right, let's see if I can. Let's see if I can go back in VTIQ. Let's see if it gives me anything there. Yeah, for some reason I'm not getting a feed on that. So let me see if I can go back and give you another chart. Let me see here. Sorry, fiddling around. Oh no, why is it not giving me a quote? Let's see, VTIQ. All right, so here we go. Yeah, I'm not getting any feeds. So sorry about that. I can't give you that. Oh, I see. VTIQ transitioned to NKLA. I'm sorry. I apologize. I didn't realize that it had transitioned. Yeah, I didn't realize that it had transitioned. Okay, I apologize. That's why I wasn't getting it. Let's see, transition. Okay, so it's transitioned. NKLA. I'm sorry. Pardon me. Looking under the old symbol. Okay, well, can't seem to get anything on. I apologize for that. Hydrogen cell trucking company. Here's the problem with hydrogen as a fuel. Um, Hydrogen is made, I know this sounds, I shouldn't tell you this. Hydrogen is made from natural gas, at least in commercial quantities. You can do electrolysis, but hydrogen, at least in this country that's consumed commercially, typically is made from natural gas. So I don't see hydrogen as having any real advantage in terms of that. I think electric is where it's going to go, and that's because natural gas is used already to generate most of the electricity in the United States. So that's my appearance. Sorry about that. I hopefully will get a better feed on that. Well, I have wasted a complete hour of your time, but I really appreciate everybody logging on, and I hope to see you tomorrow. Tomorrow's Friday, of course, and you know, it's been an interesting week. It's been a very powerful week in terms of the market, and you know, it's I'm hopefully going to have some good suggestions going into next week. You know, as potential long and short and medium term plays on the market. So I appreciate you logging on here. And by the way, if you are looking on this, if you could please please tell your friends about my show and any questions that you have. If you could, I would appreciate it if you would if you would potentially go over to my website, and we have alerts, and it's basically www.dallastradingfloor.com, and you know, just sign up. It's all free, of course, and you know, it's just kind of my take on it, and how things are trading in my neck of the woods. So but I do have alerts on it, and you definitely can make money on them. Here's the address and my phone number, and I have it up on the screen right now on YouTube and Periscope as well. So I will definitely try to cover indicators, because I think that's very, very important. And thank you for that. Thank you very, very much for that. I'm going to write that down. Indicators. And hopefully I can present some of those indicators that I use. And I use psychological as well as market indicators as well. So I will see you tomorrow. And good trading, and have a good day, and stay safe. Bye-bye. And for everybody there on TikTok, goodbye. And everyone that's live with me on YouTube, thanks. And please subscribe to my channel. I really appreciate that if you do. And that's, of course, subscribe and like and all that kind of stuff. You know how to do it. And so hopefully I will see you tomorrow. Bye for now.